Hey, good morning, good afternoon, everyone. It's Trendy John from Simpler Trading. I hope your weekend is going fantastic. I am going to get into this broad market analysis, but before I do that, I want to remind everyone, please hit the subscribe button and please hit that like button. Also, a couple personal things coming up. I am leaving on the 15th, headed to Milan. We'll be going all around down to Lake Como for a wedding. And then from Lake Como, we'll be headed over to Florence. We'll be going to Positano and then back to Milan. And I'll be getting back and ready for the first week in August. So a lot going to happen, probably the longest I've ever stepped away from the market. But as a reminder, for $7, if you haven't done so already, I'll be running my SPX fly bot that will be taking trades for me while I step out from the market. I'm really excited about this. Now, a couple things to consider is that the $7 will get you in the room, and then I have those bot trades already patched into my API, and they will be performing there in the room. They have trims on them, they have automatic stops, and so forth. So all that's been taken care of. It's always the same type of trade. It's going to be 25 wide, and we are selling deep in the money deltas, depending on which way the market is setting up, according to the overall methodology or the training that we've taught it. Feel really confident about it, but just like any other trading, it can get stopped out. It can win. As of today's date, it actually has a 90+% win rate. But as a disclaimer, that doesn't mean that could all of a sudden just start losing this coming week. Now, it has been through some crazy times, meaning volatile moments. I don't have blackout dates on it. That's why I love it. I like to kid around and call it the honey badger because it really is the honey badger. It likes to trade all market conditions, just like me. So I'm really excited about that. So if you're interested, for $7, you guys can come and hang out. Now, inside the room, we also have what we call trendy ambassadors, and they like to share their ideas and their insights on the market, which is like just an extra bonus there. And Melissa will also be in there as well, helping out, and that goes for the trendy room as well. So again, guys, only $7 to sign up for that. Let's go ahead and get started with this week's major U.S. economic reports and Fed speakers. I want to remind everybody that these are catalysts that are in the market that push price to the levels that we go over in here. So you'll see some of the charts that I show you a little bit later, where I'm looking to get long or possibly get short and so forth. These are levels that we've already pre-planned, if you will. And these catalysts that we talk about on here are catalysts that can push price there very quickly. So nothing really changes in the market, and that's something that took me a long time to understand, is that I felt like events or like examples, earnings, FOMC, the POTUS, like anything that comes out could really change things. But what I find is that the market always trades the same way and ebb and flows. It goes up, it goes down, it goes sideways. And these catalysts, we identify them because if you could, imagine something that is slowly doing this without catalysts in it, right? The market kind of goes up and then it comes down, it goes sideways, maybe come down, moves up. And then when we get catalysts in the market, say like FOMC earnings, things can move very quickly. All right. What I find is that when you have your levels and you want to make sure that you know what to do when price gets to those levels. And that's what we really like to teach. Okay. So remember, we have Melissa and I just these last several months have taught, I believe, 13 classes, and all of those can be found on your dashboard here at Simpler Trading. So if there are certain things that you would like to learn about, like how we trade into earnings, Fibonacci's, which I really highly recommend, how to use trail stops, mindset around trading, all of these things can be found in our workshop. So look for those on the dashboard. If you have any questions, just reach out to us, okay? All right, let's get started here with these U.S. economic reports and Fed speakers. Again, these are just catalysts that can move the needle a little bit quicker. And on Monday, starting tomorrow, there's nothing scheduled. Tuesday, we have Consumer Price Index, CPI year over year. And then we go into Empire State Manufacturing Survey, Fed governor, Boston Fed president, Dallas Fed president is talking heads basically almost the entire day. And they could say anything. So just be understanding that it's a good time to be sort of neutral, not only in the charts, and I'll show you that soon, but especially on days where you have a lot of speakers. Okay. We will get the volatility first thing in the morning. These times are Eastern time. So just understand 8:30 for me, I'm Central time. So an hour before the market opens, we're going to get these moves. Okay. Wednesday, July the 16th, we have Producer Price Index Core PPI year over year. Again, getting busy first thing here in the morning. And then we get into a couple Fed heads that are speaking. And then we get down here to the Fed beige. And then we end with John Williams' speech, which is, after the market, but still in the afternoon there on Wednesday. Thursday, July 17th, we have initial jobless claims. So once again, kicking off about an hour before the market opens, we start to see movement in the market. U.S. retail sales, Philadelphia Fed Manufacturing Survey, business inventories, home builder confidence index, and then again, a lot of people speaking. So a lot of noise going in on Wednesday and Thursday as well. And then ending the week with housing starts, building permits, consumer sentiment. And keep in mind, we all know any sort of tweet bomb can come out and cause volatility. But again, I don't want traders to be scared. I want you to learn a process and I want you to really embrace and love the idea. Like when I come in here on the weeks and I see a lot of information, I get super excited. That means we're going to get some volatility possibly in the market. When I don't see a whole lot going on, I start to think maybe sideways. Okay. But the charts have a lot to do with this as well. And we'll get into that here shortly. The next thing that I want to be going over is this week earning whispers. Okay. And I like to use X for this, Twitter. And I like to use this handle because I can count on it to be there. And I love it's really easy to see the calendars and look at this and go, okay, right. This is a report that I might be interested in because perhaps I'm already in this, name, or maybe it's going to impact a longer term trade, or perhaps maybe I just want to trade into earnings, just like the workshop that I did. Now I'll be traveling. So again, I won't be doing a whole lot when it comes to this, but I'll tell you what, it's getting excited. Financials are finally here. And, we're kicking that off. You guys can see here after the close, we have a few names reporting. None that really get me excited, but Tuesday is where it starts getting good. JPM, Citi, Wells Fargo, BlackRock, right? Over here on the close on Tuesday, yeah, Pinnacle and so forth. Wednesday, United Airlines, ASML, Bank of America, Alcoa, Kinder Morgan, Goldman Sachs, Johnson and Johnson, and I'm just naming some names that I perhaps, if I were here, I'd be looking at possibly taking some trades. Thursday gets really exciting because I always like to see how Netflix is doing. Then we have Interactive Brokers, and then on Friday, 3M, Truist, Regions, a couple other banks, and of course, American Express. So getting exciting. It looks like I'll be going to Italy as earnings season is coming in, which is really, it's okay. It's a good thing because I don't think I've ever really left when earnings season was coming on like this. So I'll miss it, but at the same time, it's okay because you guys get to trade this with Melissa, and she'll be here to lead you. Okay, so that is our earnings for coming week. Again, it's looking busy, and things could happen. Exciting, or maybe not so exciting. The SPY. This is where I like to dive into the quarterly candles because I love the bigger picture. The bigger picture just really keeps me calm, especially when we have short-term pullbacks and stuff. I always come back to this chart. I've been teaching you guys this for many, many years right here on YouTube for free. This is what I love to do. And it really does come down to something as simple as this. Looking at this thing and becoming comfortable with what is the high probability. For example, the high probability is when we're above the cloud, then we tend to trend to the upside. And anytime we get the short term pullbacks, the cloud tends to be our support. And we can see that. And we can see that just taking that simple, right? That simple fact there, that the market has been above the cloud since around 2012, 2011. Okay, there's just a period here for a second that it had pulled back. All right. When we're under the cloud, then that's where, from a long-term portfolio management for me, that's where I'm really like hands off and we're waiting for deeper discovery before I add on to those longer term trades. Okay. And going back here since the inception, at least for Thinkorswim, we can see that we could pull all the way back here in 1993. And in 94, 95, we got above the cloud and same thing. Prices continue to move up. We pulled back. We found some support. You'll notice that if we just take a line here and I show you these lines of how long we trend above here, you could say that there are only very small points or time frames within the market that have really been right here. We start to go underneath very small time frames throughout history that show that it really doesn't pay. I shouldn't say it doesn't pay. It doesn't pay to get into the mental state of feeling like the market is a negative thing. Over a long period of time, it's awesome, and this is why we want to focus on being long for the most part, and then short term thinking about, do I get short with some puts, some sort of insurance? But I'm always looking to buy the dip. I pride myself in buying the dip, and so does Melissa. And we like to find levels where we want to do that at. Okay. So coming into this week, I have some very, straight notes here, nothing profound. The first fib exit, or sorry, the first extension target was hit. You guys can see that at 627. I think we got up to around 628 or so this past week. Just overall, stay with the trend, right? And I say that at least short term, everything looks really, really good as long as we can hold this trendy edge right here. So this was an edge that we were waiting to break for several weeks ago. I told you give it about 3 weeks or so, we would see all-time highs. I was using a 95% probability. We saw that. We've broken out to highs. And now the sentiment seems to be, at least for some of the people that I follow, is that the market needs to pull back. And I agree, but I think there's other ways to approach it so that you don't miss out on the run. If it continues to move, then you kind of look back and go, man, for a whole entire month, we just kept going up and I just was too scared to pull the trigger to the upside. So I'll go over some of those clues and how you can look at that here as well. Okay. But as far as the quarterly is concerned, guys, I love it. It is extended from the 9 EMA. I think it's important to note that. But I think just like last week, we stick with the trend. And once we start to get, small clues that things are breaking down on the shorter time frames or smaller time frames, then we can start to think about protecting, if you will. Okay. Now, let me go ahead and show you that. So I'm going to take you from a quarterly. That's a little bit different than our normal broad market analysis, but I want to talk through how you can do this. The first thing is I did a YouTube video where I teach you how to set this up so that your charts look like this on Thinkorswim. And what this is like multiple time frames. It's not a flex grid. So this is just a regular grid that has 5 different charts in here and 5 of one of my favorites, like far as time frames go. And it easily allows me to access different time frames by using these arrows here. And then on each time frame, I also set a default, a weekly, a 4-hour, and so they all have different levels on them. Let's go ahead and go through those. So our next one is going to be the weekly. All right, and as far as the weekly is concerned, this is really big for this week because one of my favorites is identifying that first inside candle which is what we got last week. And anytime we get an inside candle, what I'm looking for an example in here, is we have a candle that moved up, and then we have a candle that closed within the body of the previous candle. I call that an inside candle. Not to be confused with a price close within wicks. I am only talking about the body. So this is what we've identified here. And what I'd like to see is that this body right here, I want you to think of this area as being neutral. So if I were to draw a line, at the bottom and top of that inside, if you will, as soon as price gets over that threshold, I'll call that an inside and up, or I will call this an inside and down. So it's really easy for me. It's a if this, then that. If price gets up and over this threshold, then I'm thinking prices continue to move up on the short term. And if they break down, to the downside, then this is going to be my over under for an inside and down. And I'm looking for prices to the downside. Now, the thing that makes this a little bit difficult to do today, because or starting this week, is that the inside, right, the top of the body and the lower end of the body is so small. Like that's not always the case. Like for example, let me go over here. Notice that the inside candle here is really wide. So, I draw a line here and I would draw a line here, and that gives us a big neutral. Well, you can obviously see if I were to draw a line above here and a line below here, it'd be so tiny. But we can still do that. And if we were to open that up roughly, let's say that's 623.65, and down here it's 623.35. So it's only about 30 cents, which is nuts. All right. So this looks like what we call a doji candle. Like it's just absolutely a neutral candle. Okay. What I do like about this candle, and what we can do, is we can measure last week's candle. And I want to see, and I don't even know this yet. We're going to do it together here. We're going to go from the bottom to the top. I want to know if price closed above the bull channel. So it has to be above the 38% or the 23.6%. And you can see that it did close above the 38.2%. So it actually closed in what Trendy teaches as a bull channel. And that's a good thing. All right. So I like that it closed up here. It was bullish. So instead of just saying neutral from my methodology, it actually, the definition would fall into a bullish. Okay. And you guys can see that up here. We have a weekly that is bullish, a monthly, and a yearly that is bullish. So the overall sentiment in the SPY for me is that overall sentiment is neutral, but obviously bullish, but we're also taking into consideration this here. So what I do is I start to break this down. Okay. And I start to look at smaller time frames to see if certain things break. So for example, I'm always paying attention to the 9 EMA. And this cloud, the Trendy cloud, has the 9 EMA built into it. Okay. I notice here on the weekly that the 9 EMA is confluent with the 38.2 of a bigger range. So a bigger range I measured. And this is the bull channel of that bigger range. Okay. It is also confluent with a double inside and up and with a bigger volume candle here. So there's a lot of reasons why if price were to come to there, it would be a nice place for me to try and take a long. Okay. So that's what I assess from looking at a weekly. Neutral candle, overall trend is bullish. And I want to use those levels I just told you for an over under to continue that bullishness, or perhaps you might start to see some sort of breakdown. But you'll notice that the 9 EMA is pretty far away from price, right? So for me to sit here and go, well, I'm bullish as long as price stays above the 9, that's true. But what about all this distance it could travel? Do I just want to sit there and stare at it? Or do I want to try to get short, from, let's just say 623 and try to make it down to 602? That's a big move, right? So I want to kind of prepare for that. And I've already done that in the SPX room with I believe we did a 50 wide, and we bought about 10 days out for premiums to decay on the call side, just in case that did happen. Okay. So again, I'm kind of looking out and just saying, hey, the market could pull back into this level down here. Okay. Now, as we break it down and we go to a smaller time frame, you'll notice that now we're on the daily, And now we're at the 9 EMA. Look how close the 9 EMA is. Okay. So this makes it a little bit more comfortable. It's like, okay, I don't know where I'm opening tonight, but what I do know is that the 9 EMA falls at around that 620 level, right? And we closed at 623. Okay. So that's only $3 down. So that's a little bit more comforting, right? So if we open up tomorrow and let's just say we open at 620, then I would be in my head looking for a bounce on the open to bounce off of that 9 EMA. Because just like on the quarterly, we know that when we're above the cloud, we're looking for this nice trend to the upside. And we also know that a lot of times when we come back to the cloud, we find that support. So if we open up at around that daily support, we could get a bounce. Okay. And I love these broad market analysis for myself as well, even though you guys are learning and listening. This is something that once I say it, it's in my brain. And I know if I open tomorrow at 620, I know that on the daily, we're at around the 9 EMA. Okay. Let's go ahead and move on. Now we're going to, once again, take it one step forward into a 4-hour. Okay. The 4 hours here, notice that the 9 EMA price closed underneath that. Okay. And your next EMA comes in right here around 622, and then our third EMA is around 620 and some change. So this third EMA is kind of lined up with that daily, okay? You guys can see that just like that. So we come over here, all right? Couple things. We have a nice little inside and up formation here. We have that lower end of the cloud. It is also confluent with that daily. And so I really like this level as a short-term support if we were to gap down into that. And if we were to gap up, we'll talk about that in a few minutes as well. The thing here is, let's say that you're aware of all the higher timeframes that I just taught you. But if you're an intraday trader, then you're thinking to yourself, hey man, as long as we stay under this 9 EMA on the 4-hour, I think we go sideways to down. Where do we go to? And that's why these levels that I'm talking to you about are so important, because these could be support levels, but you could also get short using this 4-hour, right? Move over. We start to get even closer. We go into a 2-hour, same thing. We're going to use levels. That 9 EMA just really helps us understand what's going on. Okay. Are we above it? Are we below it? Move on, get into, a lot of times I'll reserve this block here for a 5-minute. That's going to be our intraday trading where we use the PMZ, so forth. And the PMZ is our hottest indicator because it works very, very well. And it's fun. And Melissa loves trading it, and she'll obviously be going over stuff with you. And this is what the PMZ looks like. It's an automated indicator that jumps on the chart. And then we have a format of how we trade around that. Okay. So for example, trend is green. I'm looking to go long above it. Trend goes above, boom, go long, make a little bit of money to the upside. Pretty straightforward stuff. Okay. All right. So overall, again, guys, SPY, I'm neutral this week. I'll be on an airplane. I'll definitely be neutral. But use those over-unders and, let them help you. Let them help guide you. One thing I didn't bring up is in the room, if you are a Trendy member and you're using Trendy edges, you'll notice that we have the future edges here, okay? And you'll notice that price was underneath, okay? This is important. Are we high up on the curve? If price gaps up, then I'm looking for this to be resistance until proven otherwise and a possible rejection here. If we gap down, we're going to have a mid here that pops up tomorrow. If we gap down into that mid, this is a neutral area, if you will. If we're above it, then I'm looking for prices to go bid, at least for a little bit. And if we're below it, I'm looking for prices to stay to the downside and then make their way slowly into the lower edge where I start to get bullish again. Okay, so you always want to ask yourself, where are you in relationship to the edges on the open? Okay, this by the way, and I teach this strategy in the classroom, is that this was a perfect one. We're almost in the middle, and so what I like to do with stuff like this is do a neutral strategy into Friday and buy call debits and put debits here. You can also do like an iron condor and sell these for credit. And then you're just looking for kind of like a neutral open. And then you would sell or buy these back on the open and make a little bit of cash there as well. Okay. But I like the debit. You buy a little bit of time, buy the call debits and the put debits. And the reason why I say that is because what we find is that we almost every week hit one of our trendy edges. And so one of these are going to pay, and in the event that they do hit, you typically, especially from a neutral where you're in the middle, is that it will pay for the other side. So let me give you an example. We drop, boom, you cash in your put debits, right? And then what you could do is buy back the short side of the call debit, and then you're looking for prices to go bid down here at the trendy edge, and then all of a sudden these calls up here start to make you cash as well. So it's like a bonus. Okay. Anyways, that is the SPY. The next thing that I'm going to go into here is going to be the Qs. So let's go ahead and get to the QQQ. And when I do that, again, I'll be starting with the quarterly. All right, same thing. It's bullish. Got a nice candle here. We have our next candle, two candles. We're above the 9 EMA. It's pretty stretched out, but again, just follow the trend. In this, we have not hit the fib extensions, 571. Our support is 539 by 520. And as long as that 520 holds, I really like this to continue to the upside. But once again, let's look at smaller time frames. The weekly is inside. Same thing. I want you to use the same exact idea around this candle. We can identify the top of that body and the lower end of that body and let that be or serve as a neutral level, over, under, if you will. And again, double inside and up. The 9 EMA on the weekly is confluent with the double inside and up. It's confluent with some trendy edges. I really like this area down here for support if we were to come back down into there. Could financials lead us there? Possibly. Let's go ahead and get into the daily. The daily, same thing. Now we're paying attention to the 9 EMA. Look, on Friday, we pretty much came down, almost touched that thing, found some support. This makes sense to me. Looking at the future edges where we'll be opening up, we're pretty much in the middle. This would have been a great strategy to buy call debits and put debits for a neutral strategy going into this week. That could have been really nice and fun. As far as the daily is concerned, it's bullish. Okay. Moving over here into the 4 hour, underneath the cloud, or sorry, underneath the 9 EMA here and underneath that second EMA as well. So this is definitely neutral. And I forgot to say that on the SPY. Anytime price is in the cloud, I like to look at it as more of a neutral. We're not above it, so I'm not necessarily bullish. We're not below it. I'm not necessarily bearish. And that's why I really like the play of the debit spreads, identifying the trendy edges there. Okay. Also, you will notice that the candles went from green to white. Okay. And that white is also symbolizing, hey, it's time to be a little neutral right now. Okay. Moving on, we can go in here on the 2 hour. You can see that the 2 hour is underneath the cloud. And so what you could say from a 2 hour perspective and an intraday perspective is that find that cloud, which comes in around, 553 and some change. If we're not above that, or above 554, then it's sideways to down until proven otherwise. So from a 2 hour perspective, I'm more on the neutral to downside. Okay. All right. And once again, we could get it into the 5 minute. No need to do that though. We'll do that tomorrow morning with you guys. I will be with you tomorrow for about, I do have several appointments that I have to go to before I fly out of here. And I'll probably be with you guys for about an hour, maybe 90 minutes before I take off. Okay. And then again, Tuesday, I'm taking off. I might be on the mic Tuesday morning because I don't need to fly out until 2 o'clock in the afternoon. Okay. We'll see. All right. So that is the cues. And again, my overall sentiment there, guys, is I'm just being neutral for this week. And I'll let price dictate, once we get over a couple levels. It'll be more of an intraday strategy. I'm not looking to get like super long on swings or anything like that when it comes to the SPY and the Qs. Just neutral for right now. Okay. Moving on down, we're going to move into the dollar. And the way you do that on Thinkorswim is $ DXY. And I use this one right here. And we're going to go to a higher time frame right there. Everything's played out just like I expected. and what I've been going over months with you. We came down into the buy zone. The dollar started to move up. The market pulled back a little bit. Was an inside week. And I don't expect the dollar to get up and over this level here. Caution, as the dollar continues to bid, but I do believe it rejects somewhere around 99 and a half to 101 and a half if we were to get into this area. Once I'm looking for a rejection, then I'm looking for the market to probably trend a little bit more back to the upside, at least for a day or two. All right, so overall, dollar getting bid, market pulling back a little bit. I explained that all last week as well. Okay, so everything's like really working great from the analysis. TNX, 10-year Treasury, I'm going to use our trading view. Okay, and you can see it here. There's not much to report on this either. Same thing I've been telling you for probably a good year. These are our major zones. Prices, in the middle. Not really expecting a whole lot here. I'm not really excited unless we get over this red box or if we get below this green box. This is just where I believe the 10-year continues to trade. Okay. All right, so the next thing that we're going to be looking at is going to be the skew. The skew is really, really awesome. I love to use all these things to come up with this broad market analysis and what I believe is great analysis. I almost seem to hit it on the nail almost every week. It really helps me to guide my portfolio, but understand that this skew is just like one indicator, and I don't want you guys to just like trade solely off of this. You need to be taking everything into consideration. Like, all right, John said it's neutral. John said that the dollar is bidding to the upside, so we may see a little bit more continuation of chop to down. And then next thing that I said was that we were looking at, just overall neutral, right? And we're going into earnings season. It just makes a lot of sense to me. As far as the skew is concerned, though, it's a market sentiment gauge and allows you to understand where potential risk may come in or maybe where potential risk on comes in. You guys can see that it closed here at around 145. I wouldn't say that's that high, especially compared to the last year and a half. This is really in this red areas where things are high. So we have opportunity for the market to continue to move up, but we're also like lower on the curve towards this risk on area, which in order for us to pull back, the market has to actually come down a little bit and a little bit more fear set in. And we could possibly go there. Who knows? But if we were to get down to here, I'm risk on for 5 days. If we were to get up to here, this is where I really start to think, hey, be careful, buy a little bit of insurance for the market. Okay. So we're not quite there at either level. So once again, neutral. Moving on, the next thing that I want to look at is going to be the fear and greed index. That fear and greed index helps us in a way that it really just allows me to understand, where um, where most participants are lined up. So you guys can see we're at 75 this week. We're actually, I believe, last week 78. So we are now at 75. So it's ticked back a little bit. And, as we tick back, we could be headed into neutral before we get to earnings. Okay. And that to me is pretty normal as we set up for earnings season. Okay. Not normal would actually be staying in the greed and the extreme greed during this whole cycle. I don't think I've really seen that much. So I would expect this needle to go back. So therefore, again, it's pointing me more to neutral. But what the fear and greed is saying is that the majority of participants are on the call side. And when they're on the call side, we typically see some sort of digestion or pullback. So just be aware of that. All right. It's not a guarantee, just something that we're noticing here looking at these charts. The next thing that I want to show you is going to be the ES futures, and these are my favorite. We start off with these every single morning in the trendy room, and the reason why we do that is because I trade futures, options, and stock, and I love the futures. And I used to be afraid of the futures when I first started trading many, many years ago, but they really help you to gauge that portfolio every day. If I'm bullish on the futures, it allows me to be bullish on all the names that I'm trading as well. And these things are really important. So, for example, when we noticed that the Dow Jones was not making its highs, we looked at some probabilities and Fibonacci's, and that kept us long in here because the Dow was not uh, at its highs yet, and so that allows me to also say, well, if the Dow is not at its highs, what are some of its top holdings and where can we be looking to put some money? All right. So, very fun stuff. Don't be afraid of it. I said this last week. I would highly encourage you to reach out to your broker and look at getting access to futures trading, but not without that education. So, make sure you're educated in it. Your brokers can help you and so forth. And then, if you want a little bit of methodology, you could always check us out as well. Okay. This allows us to not only hedge our accounts, but also just to trade futures if we want to. Okay. ES futures, same thing. Looking at the SPY, you got an inside week. We're just going to use that inside week as a possible inside and up formation that leads us to some of our Fibonacci extensions, or perhaps we go inside and down and gets us back to support. And if we keep breaking down, could get us all the way back to this level in here. What I personally would like to see and what happens are two different things, but I'm going to go ahead and give you my personal preference is that we actually get an inside and up that helps extend this line past this 9 EMA, past these previous highs. That's what I want to see. So you got to understand how price has to move in order for the EMAs to move. So a blow off type of top would cause this to stretch a little bit. Once we start to see this stretch, the 9 EMA around this area, I feel real good. Then we're lined up with previous highs and we're lined up with support. Then I think we could roll over, say in the next 2 to 3 weeks, and then possibly, see more of a pullback, if you will. Again, I'm just giving you my personal opinion there. Okay. These are targets to the upside using Fibonacci extensions. I teach how to do that in my class. And then down here, these are levels that are aligned with Fibonacci's, my indicators, and some candle structure. Okay. Moving on, we're going to go into the daily. I did not change my levels for this week. You can see that they worked really, really well. I said this would be resistance. If you want to be picky, for those who have the trendy indicators, just move this yellow line directly to this upper trendy edge, and that would be your resistance. Notice that I do not have a short trigger for right now because we're at highs. We don't really have any structure up here. No reason to put a short trigger up here. I kept my trigger long down here. If you want to be picky, you could see if we're going to get buys down here at the lower weekly edge, but for right now I'm keeping it where it was. So again, no change to any of the levels here on the daily. Notice here, no changes as well. The 4-hour worked really well. We pushed up into a area of resistance. We pulled back, and all this stuff was here before market hit those levels. And now we have the same levels going into next week. Okay. Next, I want to show you, before we move on, understand that we have what's called intraday setups that I trade every single morning with our room. Matter of fact, if you've never seen it on Twitter, I like to give an update on my micro strategy, which I won every single day last week, and I have won for many months in a row now. My goal is to teach people, to show them that I just trade the levels and make $100 a day. $100 a day makes $25,000 a year. This was a goal that I set for myself just a couple months ago, and since then I've done nothing but gain in these micros. And again, I give you those snapshots out there on X. So if anyone's thinking about trading futures or you're interested, or maybe you're using some sort of program like a prop firm or something and you're looking for something to help you, I do believe that my levels work very, very well. So it might be something you're interested in. Okay. But this is what it looks like. I talk more and break it down in the morning and go over where we want to get long or short. Okay. Let's go ahead and move on into the NASDAQ. This is the next one that I want to cover. You'll notice that I do the SPY, then I do the ES, I do the Qs, then I do the NASDAQ, okay? Let's go ahead and get into the higher time frame, and just like which you would expect, it was an inside week as well. And we're just calling this neutral. And we have a bullish channel down below. If we're to pull back there, I'm looking for buyers. And then we have extension targets to the upside. Same thing, guys. What I would want is more of a inside and up formation. And I want to see this 9 EMA push even higher, and I want it up and over these previous highs, and then that means price probably moved up into this range and then perhaps roll over. Okay. So again, I'm not in a hurry to try and short the market at the moment. Okay. But I do have some protection on in the SPX. Next, you'll notice that I did not change these levels either. These are the same levels I gave you last week. I told you where resistance was going to be. You can see there was indeed resistance. You can see that price pulled back. The 9 EMA held. I have some trigger longs. Again, disclaimer, these triggers are not something I blindly trade. I teach what to look for in some of our indicators that we use to get long or short at these levels. So the idea is to wait for price to get to a level, then we execute based off of other criteria. Okay. And then as I move on, again, did not change this as well. You'll notice that we have two little boxes here. They're working well. And let's just stick to this overall blueprint. The next thing that I want to show you is going to be the my favorite chart. And that's because I do have Bitcoin, like straight Bitcoin, and I buy fractions of it all the time. I actually have a monthly distribution, if you will, that I like to put towards crypto. And the reason why I love it is because it's no different than the ES futures and NASDAQ futures. Don't let people tell you that crypto trades differently than anything else. A chart is a chart, price action is price action, levels are levels. Don't be afraid of it. There's a lot of hype around it, obviously. But one thing that's kept me on the right side of Bitcoin this year has been my blueprint that I've gave for uh, everybody here, but also just for myself. I'm looking at a quarterly chart, whereas most people are, I shouldn't say most, like there's obviously long-term holders of crypto. But for me, I'm looking at quarterly candles. I'm not interested on the daily noise or the weekly noise or anything like that. What I see here is beautiful. We came back into my level this year. I did add, and we're continuing to see a push to the upside. My 2025 projection, before any of these talking heads came out on TV and gave their input, I love doing this because it really shows the value of trendy methodology. I was talking months and months ago where we would go this year, and 138 by 167, just using some basic stuff. If you need all the news and all those things to make you feel better and give you those like little warm butterflies and unicorns and all that great stuff, it's great, right? It gives you that validation. But at the end of the day, just using Fibonacci's, some candle structure, understanding the 9 EMA and the cloud can really, really help you become more confident and consistent in your own trading, you know? And that's what I'm concentrated on. So when I'm looking at crypto, it looks no different than the ES futures. So I'm bullish, obviously, but I'm also neutral because I understand that 9 EMA is quite some distance down below. So let's just take it into the next step of looking at the smaller time frames. Is there anything to be concerned about? And when I do that, you'll notice we come over here to the weekly. I would say there is a little bit to be concerned about because um, this 9 EMA and where price is pretty extended, okay, from a weekly standpoint. So if we end up going sideways to down, just know that your support going into this week is around 108,000, okay? And to me, a lot of people, you'd see a lot of fear coming out, people talking trash and like, I went from 119 to 108, but at the end of the day, man, it's just technicals. So what I want to see is the weekly candle can close above 108, and I would hate to see it under 101, but obviously I would be adding at certain levels to the downside I've talked about in the past, okay? From a daily perspective, this is a little bit of caution. We have a gap up, right? And we have this 9 EMA way down here. What I would do for me is that I would take this gap and I would measure from the gap with fibs to the high. And as long as price can hold that 618, I'm bullish on the gap. So this again is the golden fib at 116. let's just call it 116,000. So as long as price can hold 116,000, I'm bullish on the gap. If we start to break down below that and close under it, say on a 4 hour or a daily candle, then I think we're going to fill the gap back down to the downside around 114. Okay. As far as like extending to the upside, that's where this number right here, I'm using this little orange edge right here. If we can get back up over 119, okay, then I believe we have a 95% probability that we're going to take out that 119,450. Okay, so those are my levels for Bitcoin this week, guys. And if you really appreciate this video and the levels, please give me a like. Please share with your friends and family. And again, SPX, I'll be running the bot for the whole time I'm in Italy. And man, I just really love you guys and thank you so much for your support. And I can't wait to see you guys in the morning. All right. Have an amazing day. Talk to you soon.